everyone is a trader when it comes to cryptocurrency. We have people sharing screenshots of how the coins they bought $5 is now $10,000. But the real question is, how much did you make? What profits are you making from it? One of the main reasons people are not being as profitable as they should is mostly because of poor risk and portfolio management, which is what we are going to be focusing on in today's video. But before we proceed, my name is Dima Otitu and I'm a content creator here on YouTube. I mostly talk about personal finance and self-development on this channel. If that sounds interesting to you, kindly subscribe to the channel for more videos on finance. And if you end up enjoying this video, please give us a thumbs up. It helps YouTube know that people like this kind of content and they push it out for more users to watch. Now let's get into the video. Risk management creates an environment that is less stressful by protecting your value in case of unexpected events or wrong decisions. Risk management is the foundation of a healthy and profitable portfolio. Also, diversification. Do not put all your eggs in one basket. This is true and important in the finance world because it keeps you safe from any disaster. Are you part of those people who have just one cryptocurrency in your portfolio? It could be risky if anything bad were to happen to that particular cryptocurrency, which is why diversification is important as a trader. The best investment is never too good to fail. So here are some of the important keys that will help you in diversifying and managing your portfolio. The first one on the list is funds allocation. When you want to invest, you have to decide exactly how much goes into investment. You have to know exactly how much is going into the market and how much you want to set aside as cash for when there is market correction. Do not go into the market with all you have because there is a high probability that the market will always be corrected or other good coins can enter the market and you would need cash to buy. This will also prevent you from selling prematurely. This also depends on how you've assessed the market and see how expensive the market is at that particular time when you are allocating the funds. Never put all your money in the market at once. Which now brings us to the second one, which is never put more than 10% of your funds in any cryptocurrency. Your portfolio should contain probably around 10 to 15 coins or more. But then, I know I said allocate 10% and we have more than 15 coins. What we have to do is to only commit 10% to the coins that you're very sure will perform well. The ones you do not have strong confidence in, you may allocate maybe 5, 6 or 7% depending on how confident you are about them. This brings us to the next one, which is the stronger the cryptocurrency, the higher the weight. What I mean by this is you can list all your cryptocurrencies, go through the fundamental analysis, check what the project is all about, the team behind it, what value they bring to the market, will they be relevant in years to come? What is the community like? Do proper researches. This will help you determine how strong they are. If you have up to 15 coins, you can at least even rank them from best to worst coin in your portfolio. You can then go ahead to even grade them, say grade A coin, grade B coin, or grade C coin. When you grade them, you can then buy more of grade A and grade Bs. Sometimes these grade A coins might not even always go down, so it's best to dollar cost average them as opposed to buying more of the least coins. This will help you put 10% to grade A, maybe 8% grade B, and 6% to grade C. The higher the confidence you have, backed up with proper research, the more you can invest in the coin. This brings us to the fourth one, which is review your portfolio at least once or twice a year. If you have invested in a coin for at least a year or maybe 6 months, you can always review them to see how well they are doing. Do they have a strong foothold in the market, a big established network? Take note of any news the company is announcing that is out of the ordinary. This will help you decide if you want to still keep that coin. We all know how even the smallest of news affects crypto markets. What new development do they have? How is the community and the social media activity going? How active are the founders and members of this project? Are they moving with the technology? How has the coin been performing? Things like this will help you decide if you're going to be accumulating more of the coin or you're just going to let go of the coin. Always do a portfolio review. It will help you manage your risk properly. The next one on our list is always take profit. No one ever goes broke taking profit. I do not mean for every single price increase in the coin that you own, you quickly rush to sell off. This depends on the strategy you want to use. Some people may wait for maybe 2x or 3x or 5x of the money they invested in, then they take out the capital and let the rest sit in the market. This will give you more cash flow to be able to invest in other new coins or even buy more of that coin when the market corrects, because the market will always correct. Now, there is no specific amount you should cash out. This is something you have to determine on your own by weighing your risk and profit in the market. The next one we have on the list is create a portfolio management strategy. What this means is how you plan to invest in the market, how long you want to hold on to a coin, when will you take profits, when will you sit one out. Why this is important is to prevent you from trading or investing with lots of emotion. Maybe you hear, oh, this coin is going really high, and then you rush in to invest because of fear of missing out. And then when you go into buying it, the bag gets dumped on you. Or maybe you sell off at the time, you've made up your mind, okay, this is a strategy I have, I'm going to sell off at this point. And then you sell off, and then maybe the market starts going up. Because of fear of missing out, you rush in and go and buy, and the bag gets dumped on you. So when you have a strategy, you would avoid trading or investing with lots of emotion, making rash decisions here and there. The next one on our list is be patient. Be patient. Things take time. A lot of newbies in the market want it now or never. They keep looking at their portfolio to see when it will 10x. This only does more harm than good, because in situations like this, you start making poor decisions, selling off at the wrong time, buying at the wrong time, not doing proper researches. Always be patient. Things take time. Now, this brings us to the next one, which is constantly learn more about the market. When you stop learning, you start dying. Things evolve every day. If you don't keep up with the trend, you would be stuck in the past. There are new developments every freaking minute. Something better is always coming out. You have to be up to date. This will help you decide which way to go in your investment. It will help you discover true gems faster. Do not wait for someone to always do the research for you. Follow experts in the field, be it on YouTube, Twitter, Instagram, Medium. People that know what they are doing and talking about. Make your own research as well. Imagine maybe you knew about maybe Metaverse or Web 3.0 when it was still new, and then probably you invested in it. It's okay not to know everything, but always put in the work to keep yourself updated. This brings us to another one, which might probably be the last but not the least, which is always remember to keep USDT for smaller projects, which you might see will perform well and have high return. But always know that they are really risky, high risk, high reward. This part of your portfolio could potentially include other risky things like maybe yield farming, staking, and maybe initial fundraisers. Now, summing up, cryptocurrencies have a great potential to make you tons of profit. But in every market and in every investment, there is a risk of loss. Being prepared to make the wrong decision is important to give you peace of mind and protect your wallet. I hope that after watching this, you can get started with creating a plan that can foresee when the market moves against you, both in long-term strategy and short-term strategies. Also, for analyzing your portfolio, you can always use CoinMarketCap application, which is what I use. Anywhere you go, at any time of the day, you can follow the movement of your investments. I have a video on how you can use that application. I'm going to link it in the description. You can add all your coins and it will create a beautiful aggregated overview for you. Every holdings you have, it changes in value when the market changes. I know there are other ways you can also manage your portfolio by doing more research and find out more. So I hope that with these few ones I have listed, you can take out time today to re-strategize, and I wish you all the best. Thank you so much for watching. If you end up liking this video, please make sure to give us a thumbs up and also subscribe to my channel. Let me know what other videos you want to see on this channel and I'll make them for you. Just drop them in the comment section. I'll see you guys in my next video. Bye.